minutes. I have put a link in the chat box, which includes our patterns, our strategy, and the fact that they actually have some scientific basis to it. Hey, Eduardo, nice to see you again. Hope you're doing well. Kind of just watching this market. Microsoft just announced their earnings, popped up about $11, and now it's starting to settle back a little bit. So this is kind of what I was expecting. I talked about it yesterday. Hi, Enda. I'll be starting in just a minute. Hi, Jasik. Ernest, nice to meet you. Hi, Ollie. So we're right around the scheduled time. I'll give this a few more seconds, allow everybody to settle. I'm just watching these this Microsoft earnings announcement. You can see that it closed at $242, and now we're trading at $251. So it actually opened up about 11. It's settling back now, so it's up about 9. And you can see the stock market's also rallying on that news. So thanks for asking, Eduardo. Yes, my son did have a good birthday. It was a big milestone for me and him. Time is going very quickly. So why don't we get started? Welcome to the second of the 3-day live trade execution webinar series. My name is Mark Shawson, the pattern trader. If you weren't around yesterday, I talked on how I look and evaluate only price action to make risk-reward decisions in the marketplace. So it doesn't matter what I'm trading, if I'm looking at futures or FX or gold or the spot markets or the stock market. I look at everything based on price, because to me, price is a forward mechanism. Price is a discount mechanism. People have a hard time reconciling that. They think, well, if we go downstairs and grab a Wall Street Journal and read about it, then that's how to trade the markets. But the markets have already anticipated whatever is in today's newspaper was printed yesterday, and it's already out of date. The market is looking 3 months down the road. And, we are going through an extraordinary time. I think we'll look back on this 10, 20, 30, 50 years from now, and we'll still be studying what went on in the last couple of years from an economic standpoint, a social standpoint. Really what I'm saying is that, it's been over 100 years since the world was completely shut down for a few years. And then during that time, the Federal Reserve flooded the zone with trillions of dollars. And we're still yet to see where this experiment is going to go. And so the markets are reflecting, this uncertainty. The S&P is trading at 4,000 right now. I think it was 3,900 in May. So for the last 6 months, we've just kind of been vacillating. The market's trying to find out which is the theme, which is the side that it wants to get on. And it's been a difficult, challenging time. I always look for moves that go from one level to the other. And this has been an environment where you can't be long for 2 days and you can't be short for 2 days. So it creates a great deal of uncertainty. I always, I don't advocate to people, trade and, watch the markets very closely. But unfortunately, this has been an environment, you can only do what the environment says. And so, I've been advising our members to take profits pretty quickly. When you, get in, I try and find a place where the momentum is going to go from one level to the other. And that could be a day or 2 days. And in this environment, you just got to keep pocketing, that money and waiting for that time where now we can ride a wave. And this wave may be sizing up. I mean, I think we're in a make or break environment over the next week. We had Microsoft today, and we'll have Apple next week, and that'll give the market a lot of information to digest where we're at. And it may or may not result in a move or not, but that's where we are right now. So I just look at price and I wait for setups. I'm going to be looking at the precious metals today. And I said at the beginning of January, I think gold is the place to be for 2023. I think we have stagflation, which is stagnant growth, with inflation, which is really not friendly to most asset groups. We also have, the real interest rates are still negative. So even though the rates have gone up, probably the fastest in history, we've gone up, 450 basis points in the last 6 months, 8 months, but we're still below the rate of inflation. So the 2-year treasury is sitting at 4%, and the rate of inflation is around 6%. So I think, that's where gold is a bit of a haven. We still have negative real rates. Rates aren't really where they should be. And so I think there's a fundamental and technical story for, holding gold. And that's probably the place to camp out for a while. But we'll take a look at that. So I'm going to kind of, I haven't been, I think I put up the wrong sheet here. Yeah, this is the one. So, I'm pretty bullish, but I've been pretty reticent to play this market. And, I kind of took a counter trend trade and started buying some puts in Apple today. You can see I started taking a nibble all the way up in Apple. And I'll kind of share with you, what I did, why I did it. And I also took some profits on the my stock positions. I had all these profits in these cash positions. I didn't know what was going to happen with Microsoft, so I jumped out, and now they would be way more profitable. So that's just the way it goes. And I'm still short this dollar Canadian position. So that's kind of what I did today. Now, just because this is what I'm talking about, I look for moves where you get big setups, where you get entries where, stocks, in this case, this stock was at $40. Let me just blow this up a little bit and make it better looking. This is a stock that was at $40, and just give you an idea of, how when we look at these markets, all a question of the environment, and we're waiting for certain environments. So in this case, I sold a $40 stock and got out of it, in the low 20s, and I made, mid 6 figures on that short. And this was an option play I did and made some money in the options. And this was an option play where I, bought some options at 80 cents and $1, and they went to 440 and 550. You make 400% or 500% on your money on some of these plays. This was one of my best plays, which is a couple of years ago. It was last year. It was 2 years ago. Geez, price, time goes fast. This is one of my best plays where I was very bearish this stock, but the pattern didn't do what I thought it was going to do. So, as I was kind of saying in a nuanced way yesterday, I look at how these structures set up, and then I observe, just like Apple, I'm kind of making a thesis on Apple, but if it doesn't do one thing, it's going to do another. And so I was very bearish on Beyond Meat. I was saying at $200 that this stock was going to go to $30, and I was wrong. It ended up going to 15. But at this juncture, when I thought it was going to fall apart, it was putting on a setup that, showed me that, it was not, it was not ready to go low. And to my mind, something's not going to go down, it's going to go up. So I kind of put a big stake on that thing. I bought the stock and I bought the options. I made a lot of money. I bought these options for like $1.50, and they went to $23. So this is what we're looking for in the market. I just wanted to give you a taste of that because it doesn't happen every day. But my point is, if you just catch one of those moves a year or two a year, that's how you make money in the markets. You don't make money darting in and out. And unfortunately, that's kind of been the market we've been in right now. where you really don't have a lot of choice. You can see that back in May, this is the S&P. The market's right back at the same place it was, up, down, and everything in between. But so that has been the challenge. And I'm always looking for moves where, we can make a lot of money, where, markets go on trots. They get into a trending basis where they go in directionally one way or another. The difficulty is when, markets stop going directionally and they get in these kind of churning trading ranges. And unfortunately, that's, the best we can do is, we can analyze it, but we can have no control over the environment. So that is the other thing. So we have to recognize the environment we're in and recognize when the environment may be ready to change. And I think we're on the cusp of that change. Like I said, by next week, this is a make or break situation. This is the S&P 500. We talked about it yesterday, and you can see how neatly every time it has touched this upper resistance level, it has gone down and made a new low. So that's the proverbial question right now. Is this, kind of a breakout or a fake out? And it's ready to go back in the direction of the former trend. And there are a lot of things that are starting to suggest that we're starting to get a breakout, that this is, a bullish move. But, again, as I've been saying to our members, I kind of, whenever I'm long, I kind of sleep with one eye open, because I'm always ready for the macro trend, the secular trend, which is still a downtrend, to kick in and hammer you, at these levels. Now we're at 4,000. I still think, there's a chance we go to 4,100, 42. There's even a chance we go to 4,300. There's like an area right here that I'm looking at that, I could see in my mind us getting there. But on the other hand, I can also see, it doing this. So that is kind of the push and pull. And, you position your positions and your risk, and you find ways to control whatever you're looking at. So this was the stock that I talked about yesterday. I said it looks a lot like Qualcomm, and Qualcomm had already broken out, so it gave us an insight to where this thing was going to go. And I said it was very likely that we were going to go back to the 256, 258 area and kiss that upper end. And that's exactly what's happened. We had earnings today. Microsoft closed at 242, and now it's trading at 252 in the aftermarket. I don't know if you can see it there. It's flashing. This is the live market. And Apple is trading at about 143. So I'm losing money on my put options right now. So this is, what I kind of anticipated. And again, you can see we're either going to stop around here and get hammered back in the trend, or, we're slowly turning this U-boat around. We've been in this bear market for 13, 14 months now. And now the market could be getting a sense that maybe the Fed is done and all kinds of things. And this is the trick. I still think this is a trap where, this is going to get sucked in and we're going to go back down. But this is what I'm grappling with right now, because on one hand, I do see signs. Here's a bottom. This is what's called an Adam and Eve bottom, where you see kind of two. I'm always looking for patterns and then price action. So you can see there were two levels of where, support was triggered right here, and then just one where it was triggered. So, to me, turns in the market always begin with some kind of pattern. And you can see it perhaps a little bit more intricately on the daily, but they always turn. Before they turn, there's always a pattern. So, here doesn't really look like it, but this was a market peaked, it went down, hit this top, and then created this double top. And if you look at the strategy booklet that I handed out, you'll see these patterns. And so whenever a market kind of goes one way, before it turns, it always creates a position, a pattern that we can recognize that will turn it the other way. So now we've had this double top and it's directed us to sell that thing, but now we could be looking at a bottom, which could then be directing us the other way. So I look at a combination of these patterns and then also what I call the price action within the patterns. The key reversals, the inside day bars, things of that nature. And you can see how well these markets confirm or conform rather to these levels. I'm just trying to get rid of some of this distraction here. So you can see every time this got to this area, it bounced off. Now, similarly, every time it's gotten to this top area, it's bounced off. And now we're back here again. So now the question is the behavior going to be the same as it was there, there, and there, and head back into the trend, or are we breaking out? And that's why I say we are literally at a make it or break it stage this week and probably next, but the market's already starting to break out. Semiconductors, small caps, technology have already started. So we had all kinds of fear. I remember, November, December, everybody's talking about impending recession. Everybody I listened to, on these news programs, these, business news programs saying it's going to be terrible first half, rally in the second half. And I'm going, well, if everybody's thinking that way, the market is not going to conform. And so, this is why you have to be objective and only look at price. You can think of 1,000 reasons why to be afraid, but the market is starting to break out. So this is what I try and do, observe what is going on in price. Now, today I took a crazy kind of kamikaze play. Typically I like to see momentum in the direction that I'm looking at. So I started shorting Apple here. Which was really counter to the current momentum. You can see Apple's gone straight up from 125 to 142. And there is an area in here that this is it. It's either going to respect this or it's going to move on. And, instead of being short the stock, if you're short the stock, you have unlimited risk. If you buy a put option, your risk is limited to whatever you paid for that put. So I was paying for these puts, $1.80, $2 for these 135 puts that expire, I think, February 10th. So after the earnings. Now, I didn't love this play because there's nothing really to signal that Apple wants to turn here. It's just at this intersect where we have the convergence of really two patterns, or three patterns, actually. So this is where it's getting real tricky in here, where on one hand, we see what looks like a huge top, makes a new high, backs off, makes a new high, backs off. And, we're kind of sitting and treading water right around this neckline. Typically, when it goes through the neckline, it confirms the move. But this is the kind of the problem. This was like a bear trap where it went just a little bit, and now it's going the other way. So this is what I do. I look at the structures, and then I look at what the structure implies, and then I see, is the market? Now, there's a lot of nuance to this. I never know how to explain this. Let me just back off here. So we see patterns all the time. So this looks like a pretty well-defined top. We go and consult our textbook, it'll look like this. But the markets, are real and live and dynamic. and they're fluid and they don't conform to what we see in the textbooks. So typically when a market goes through what we call a neckline, which is this line that is drawn through the pattern, it confirms that now this thing, has been triggered and we should go lower. But this is where you've got to look at what is the market. This is what the market should be doing. And instead, the market is doing something else. Now, is that something else, at a point where it's ready to go back in the direction indicated by this bigger pattern? Or is it just completely going to ignore this thing and, and go through here and do what we call a busted pattern? So this was kind of my analysis in Beyond Meat when I made 7 figures. I was looking at Beyond Meat and it looked just like this. Big setup, double top, head and shoulders on a weekly. And, at that time I said, well, we're ready to go lower. And what happened was the market started to not go lower. And I said, you know what? It's going to go the other way. And so Apple is really not conforming with these bear patterns. It broke and trapped everybody, and now it's going the other way. So you can see there was an area here. And again, I probably shouldn't get all this complex. It's the first time you're meeting me and what have you. So you can see that Apple's kind of, again, kissing the top side of all of these resistance levels. So it's at the resistance, it's got this double top, and then there's also something called an ascending broadening triangle. We'll look at that tomorrow when we look at the US dollar. Gold was in this ascending triangle pattern. And so these patterns can be continuation, meaning that this was an uptrend. And so if this is going to continue, this is a continuation pattern. Hits the bottom of the pattern and continues going that way. It can also be a reversal pattern. And we know once it reverses, that it comes all the way back to where it started. So now Apple is either going to go that way or go back to 90. And we're really literally at this inflection point. By tomorrow, I'm going to understand whether this is going to continue or not. But I took a gamble that we are at an intersection. So this is usually a bearish price pattern. So this is an ascending broadening price pattern where it ascends throughout the pattern. It starts out narrow and then widens or broadens out at the top. And like I said, it could be either a continuation or a reversal. We won't know until the market tells us. So I'm looking at the confluence of this double top. Actually, it's a triple top. This ascending broadening thing. And then you're also in this kind of symmetrical triangle right here. Let me just actually. So if you look at this line and that line, we're now right at the top of this triangle. So we're at the resistance area of the symmetrical triangle within this ascending broadening pattern with this triple top. And it was a real gamble. I mean, I don't like to short when things are going straight up. I like to see some kind of confirmation in the direction I'm looking at in the form of, let me just change this. What I call a key reversal. This is what if I'm looking to go short, this is what I'm looking for. Some kind of confirmation that this thing is stalling out here. You can see right here, this thing made an all-time new high, and by the end of the week, it closed on the low. This thing made an all-time high right here, and then it closed on the low. And that mini double top with those two key reversals indicated that that thing was stalling there and ready to go. But the point is, the market indicated when it was ready to turn. This market has not indicated when it's ready to turn. I just took a shot that this is where it's going to stall. And if it doesn't stall, I'm just going to start getting out of my puts. I'm going to lose some money and clean myself off. But we are at a proverbial inflection point in here. We are bunched up and this is going to go this way or that way. And I think there are still enough bear signals that it took a lot of stones to kind of short into this thing, but I think that there's still things that are going to prevail. And so sometimes you've got to look at this objective information rather than what's going on in the markets. So look, whether it works out or not, this is the kind of analysis that I do. This is the kind of analysis that I bring to our members at the Pattern Trader, where we peel apart things and try to understand where there are areas of risk and reward. And so I'm going to know very quickly whether I'm right or wrong right here. So I'm not going to risk a whole lot. Now, when you buy puts, you can lose premium I might lose 50% of my money, tonight. This thing goes up tomorrow. Oh, well. So this was probably not a great example of a good trade. But we'll see. Time will tell. But Apple and Microsoft and where we are in the markets, this is the make it or break it, kind of week. So that's what's going on in the markets. A lot of this, a lot of kind of everywhere and nowhere. And typically I'm looking for a ride, where we can ride something up or down. This is where we make a lot of money. When it starts going like this is just drives you crazy. But this is our job as traders. Part of this job is patience and having to sit through this. You might have to sit through 3 months of this in order to get that kind of ride. So, people kind of, say, well, I'm looking to make this much every day or every week. You can't create a finite circumstance on an uncertain thing. The market will do what it's going to do in the time it's going to do it. It's not going to say, okay, Mark needs to make $500 a day and we're just going to, accommodate that. I'm always looking for when the market is about to go on one of those journeys, up, down, where you get one of these thrusts. And unfortunately, in the last 3, 4, 5 months, it's been very, very difficult. You kind of have to, it's like catching lightning in a bottle. Market doesn't go up for 3 days. It doesn't go down for 2 days. It's just been like this. So we have to just kind of just deal with what the environment is, but understand what the bigger picture is telling us. And so to me, this is still flashing big warning signs. But if the market, stops respecting that, then I'm going to say by virtue of the market action, I'm not going to say I'm right and the market's wrong. The market is always right. And so again, this is very nuanced. If something doesn't go down, it's going to go up. Probably the best example of that, I was talking in our boiler room, which is our early morning session, was this stock called RACE, ticker symbol RACE, which is Ferrari. And we were in a circumstance here where it looked, this looked like a double top. It looked like it was topping out. And I said, this thing is going to go up. Why is this thing going to go up? Because it's not going down. So here is a perfect example. Now it's very hard to, I feel like I don't know if I do a good enough job. I just say, look, if something's not going to go down, it's going to go up. And if I heard that, I'd say this guy's freaking crazy. And, that's easy. Anybody could say that about anything. It's just hard to kind of explain everything that's in my head. I have a visual process. And so here is, a textbook double top that you would see in a textbook. You'd see the head and shoulders, and then you'd see the textbook looking like this, but now it's up here. And this is an example of a busted pattern where the market stopped respecting the implications of that. The implications of a top is a top, which means the market's going to go down. But the market, had other ideas. So what I do is I watch these structures, and then I watch how the market trades through these structures. So this is this neckline that we saw in Apple at 130, where Apple went, this way. Now we're at 142. And so the question is, do we stop here or do we go like there on Apple? So in this particular case, in Race and Ferrari, and it doesn't matter what the ticker is, what I'm trying to show you is a market action where the market had this top and initially broke this neckline. And for all the world, it should have, maybe retested and then done this. But the minute it started to break out above this neckline, I was saying to our members in the boiler room, this is a tripwire. This thing's going to go higher. And we've done nothing but go steadily higher. But if you looked at this on a, technical basis and consulted your textbook or the strategy booklet that I told you, and you see what looks like a double top, you'd see this is what it looks like thereafter. But this is where, the textbooks and the real life departs. And this is what I try to bring to our members at the Pattern Trader. I've been through enough. I've lost enough that I feel like I understand not where the opportunities lie, but where the traps, where the markets suck you into thinking one thing before it does another. I'm just seeing a dialogue here. I'm not quite sure if there's some questions. So I'll cover FX tomorrow, Simon. I said I was going to cover stocks today, metals, stocks yesterday, metals today. Really what I'm trying to do is inform you on a process that you can apply to Forex, gold, oil, no matter what. It doesn't matter what this ticker is. Take this away. What I'm trying to do is give you a way of looking at price and understanding the implications of price, where we see a rounding top here. It cuts through the neckline, and then you can make a nice trade that way. This was a top that you could have traded. Then it made an inverted head and shoulders and went the other way. So the market is always flashing these patterns and what have you. And then we have to try and assess and break it apart. And this is why I say when it kind of gets difficult in here, then you kind of got to break, look at a higher time frame, and it starts quietening it down. Go from the weekly to the daily to the monthly. And this was, again, a good example of if something's not going to go down, it's going to go up. Here was a double top, looked like a head and shoulders. And so we should have seen that. When the market stops respecting that and puts on, a bottom and starts breaking out of this neckline, now it's going the other way. So the market is a fluid environment. And what I try and do is look at a combination of price and price action to determine how to catch these kind of moves. All right. Are there any questions, thus far? Sorry, I didn't look at the question box while I was presenting. I don't know if I went too far, but Eduardo says, does the outside key reversal on the daily on Apple, does that say something? Thanks for that question, Eduardo. I'm not sure what you mean by the outside key on the daily. See, there was a key reversal right here, made a new low and closed at the high. And you can see following that key reversal, we've just gone higher. So I'm not understanding, where is the outside key reversal? All the way back here? Is that what you're talking about? So if you're not, so this is a definition of an outside reversal. We take out both the low and the high. So you can see this day was a reversal. It took out both the high and the low of this day, which then signified this turn. It made a new high and then closed on the low for the week. And you can see that, again, this was very subtle. And this is why just looking at this objective price action is going to clue you in way before. So you can see here's a very subtle double top, made an all-time new high, backed up, hit the high, and backed off. Now, you never really know, is that a top? How big a top is this? But to me, what was really important was not only that this made a pattern, but the price action within the pattern. And what I mean by the price action, you can see here, and this is a weekly chart, right? This is a 1 week bar. So this is an entire trading range for a week, which makes it much more impactful than a 1 minute or a 5 minute chart. So you can see at the all-time high for Apple, the market settled on the low of the week. So that told me the sellers were in control. Now, one bar, like one swim doesn't make a summer, but now you have two bars in the same spot, made a new high, and you close on the low. So that was at about 175, and you went to 125 from that top. And now the proverbial question is, has the market stopped going down, and is it ready to go up? So I don't really see a pattern that suggests that this is going to keep continuing, but we have to respect, like race, like Ferrari. If this thing doesn't stop going down, it could go the other way. So I could be just nailed on those short positions tomorrow, and we'll have to see. You can see we're right on this resistance line. So sometimes the markets sneak out, they create a trap, and we'll have to see. But right now, this price action is not telling me this is ready to turn down. I just took a shot. Sometimes I'm like a riverboat gambler. I just take a shot at a certain level, and we'll see what happens. But right now, the market looks pretty constructive, and it looks like it wants to go up. It looks like the S&P wants to go to 4,100, and we're only at 4,000. So I think that, these stocks still look like they have room to go on the upside. Frank says your explanation on Apple and race have been outstanding. Thanks for the honesty and transparency. Thanks, Frank. Thanks for that feedback. I always like your feedback because a lot of this lives in my head. I know how I visually interpret something. When something, looks like something and it's not happening, it immediately clicks a trigger in me, and I'll just get on the other side. But I don't know that I can adequately explain some of this stuff. What I do is I just draw boundaries and structures and then just observe. This has respected the upside of this structure. And now the open question is, is it going to respect it again? Or is this going to depart now? So that is what I do. I draw, and in this case, there are many, kind of structures and things that come into play, and that's what has driven me crazy. Is this real or is it not? And this is why we wait for the market to tell us. The market, if you're undecided, let the market be the referee. And so, by next week, we're either going to have something like that, or we're going to continue. I kind of feel like it's going to be this, but let's see what happens. So I said I would get to gold and silver. Let me do that. And again, what I'm trying to do throughout this short is just share with you a way of analyzing price and price structure, but also understanding, and these charts will also explain the same thing that I struggle with, how fluid the market is and how you have to just understand price, because if you're trying to parse all the information and then relate it to a trading strategy, you're not going to be successful. So actually, what I'm going to do is I'm going to start with silver first, because this was like race. This was a market structure that, to my mind, should have done one thing, and it started doing another. So you could see for 2 years, whatever this process was, we kind of had this rectangle top, this distribution, where throughout this 2 years, we had the double top here, we had these head and shoulders, we had a double top here, a nice looking head and shoulders there. And when it cracked this neckline, I thought, okay, fine. Now it's resolved 2 years worth of crap. And now we're ready to pick a side, pick a direction. And it broke out. And then typically when things break out of an area, they usually retrace. And I go, fine. So now this should be it. This is what I pictured in my mind. And when the market started doing something else, so this is what I do. I start off with a visual process. I start off with a thesis. Here's a bear price pattern. This is what the market should do. But when the market started to stall out, it was like pushing on a string. And this is, again, is a weekly chart. Each one of these price bars is a week. You can see that it just couldn't go down anymore. It's like, you push on a ball in the pool, you push this beach ball further and further underwater, and then you let your hand off, what's going to happen? It's just going to uncork to the upside. So this is what this did. It was like building up pressure. It's just every week you try to push this thing and it wouldn't go lower. So again, and it sounds really, kind of mental. To my mind, if something's not going to go one way, it's going to go the other. So we look for these departures in price action, what should happen and what actually does happen. So here's this neckline, kind of a continuation. I'll just make it a new neckline because it's, so you can see where it broke down here and then it came back to revisit it. And in my mind, that was not right. That was not comporting with my picture. This was a bear thesis and this should have gone down. So when the market starts diverging, this is where it starts triggering. And again, in the boiler room, I told all our members, you got to start getting long here. And this still looks like a setup where it will continue going higher. I mean, we've got this kind of bit of this consolidation in here. Looks like we've, run into a bit of a rounding top here. But, by virtue of the preceding patterns in this breakout, I think you'll eventually break out again to the upside. So now you're in this little rectangle, thrashing around. This has been 6 weeks of price action, but the more something builds in an area, when it eventually does break out, you can see this is what builds this coiling, this energy. When you have like all of these inside bars, you can see that every weekly range is inside the other. So you get this coiling of energy, this storing of energy. And to me, the energy is going to uncork in the direction of the pattern. So this is an example like race. It's not going to do one thing. It looks like it's going to do another. Now there's, there is resistance in here, and this is where it's kind of resisting, and it might take a while to, thrash this out. This is 6 weeks of just going nowhere. And this is the markets, but this is what we keep an eye on. We keep an eye on these coils. When something is mature enough, when it's done enough sideways work, it might try and hook us in on the downside. And if you don't understand the pattern, then you get hooked in, and then it's going to go that way. And this is what I look for. So this is gold on the top. XAU USD is spot gold. And spot gold was in the same ascending broadening pattern that I just shared with you with Apple. And you can see initially we broke lower, we retested, and just like silver, I thought, okay, this is what we're going to see. But then in the real life, in the real market, and again, the market is always right, you can see right here, there was this triple bottom. So I look at a pattern and price action. And so here you can see you made a new low. You can see 1, 2, 3. Now, over the course of these 5-6 weeks, every time the market hit the 1600 level, the buyers were in control. They closed on the high of the week. So, I was bearish, but when price action when the markets start, if I'm short and I see something like this, I'm just out. It's like having the wind in your face. You want to have the wind in your back when you're trading. Right now, if you're long gold, the wind's been at your back. But, if you ever saw something like this, get out. Now, not every reversal is going to be a reversal of price action, but it's likely that it would just stop for a period of time at that level. So this was a very key level. You can see that it kind of stopped here, it did this triple bottom, but it was also in this area previously where every time we got here, buyers surfaced. This made a new low, close on the high, made a new low, close on the high, made a new low, close on the high, made a new low, close on the high. So you can see that this was an area of accumulation. So you can't find this in the Wall Street Journal or some textbook. But if if you look at price, if you see which way these, at these major levels, and the bigger the bar, so sometimes you see these little inside bars, you can see that these are bigger ranges. And by virtue of how they close, they actually point. This thing was pointing in the direction all the time. So it's just a combination of patterns and price action that put us into trades. And understanding, again, this was a breakout of a descending triangle, of an ascending broadening triangle, and this was should have been a bear price pattern. But now it turns out it's a continuation of the prior move. So when something, starts doing something different, so you can see here was a textbook double top, head and shoulders. And I thought the combination, like I do with Apple, and this is where, again, this, I likely have a departure, with Apple, where you see this double top, the head and shoulders, the intersect of this ascending broadening thing. And I thought, okay, once you broke that, for certain, we're going one way. There is no for certain in the market. You can see that one pattern, double top, head and shoulders, just led to another one. Here's now an inverted head and shoulders, an upside down. And you can see it tripwired this neckline right here. And I think that this thing is just going to keep going higher. I think this is the trade for 2023. Look for any breaks to, get long gold. I think by not doing one thing, it's going to do another. Simon says you're the best educator out there, bar none, crystal clear. Thank you very much, Simon. Tomorrow I'm going to ask you for a review. And if you would, I would really appreciate if you could just say that exactly. That would be nice. So I am going to now I have a book, and the nice thing is it's kind of a pay what you want, $5, $10, $20, $100, whatever you want. And this trick, this explains my 4-step trading methodology. Look for the trend, look for the pattern, look for the insurance day bar, confirm it with a buy stop or a sell stop if you're looking to sell it. And I don't make any money. Whatever you decide to contribute, all contributions go to the American Childhood Cancer Organization. I've given over $34,000 over the last 12 months to this, great organization for kids. So you get, I think, some good value, and your money is going to a great cause. So that's really what I have today say. Are there any questions on this analysis? So let me put this in the chat box before I forget, because I know I'm prone to do that. And if you are, interested in checking out the Pattern Trader, what we have to offer, just send me a little note. And here's the email. Excellent as always, late here in the UK, but unmissable. Thanks again. Thanks for that, Simon. Arnie, I'll talk about the dollar tomorrow. I'll talk about FX and the dollar tomorrow. Thanks for that, Sebastian. I appreciate that. Francis, book's well worth getting. Ollie, you're welcome. Are there any new questions? Eduardo, you're welcome as usual. Ahmed, I will talk about the dollar tomorrow. So are there any questions on the methodology, on price action, on, these charts at all? Otherwise, I'm going to thank you for showing up. Tomorrow we'll take a look at FX pairs and the dollar. I think there's going to be a huge move in the dollar over a long period of time. And that'll be a 4:30 same time, 4:30 Eastern Standard Time. Tyrone, you're welcome. All right, so doesn't look like there's any more questions, so I'm going to hang it up there. Thanks again, everybody. We'll see you back tomorrow. Thanks, Dwight.